Hello and welcome. Thank you so much for taking the time out today to watch this presentation, which I believe will change your way of thinking about investment for 2016. My name is Buki Akoa, and along with my husband Chidi, we are directors of Acquired Homes Investment Property Services and Management. Now, it's likely that if you're watching this presentation, you're either a client of ours already or you have connected with us personally in some way or the other. Whatever may be the case, we'd like to invite you to sit back for the next few minutes to find out how you can really boost your income in property in 2016. Now, we're going to be talking about three main things on this presentation. Firstly, 4 things every property investor must know to get the best returns. Secondly, one of the best locations in the UK to consider investing in 2016 and the reasons why. Thirdly, one strategy that can easily help you to replace your income within 90 days. So, before I begin the presentation, I just want to give you a brief introduction about myself and my husband, just so you get a feel for who we are and what we're all about. Now, here we are there in the picture. We have both come from corporate backgrounds, and my husband's from a banking background, and I've worked for corporate real estate companies for a number of years. I've actually always had a property background, but mainly within corporate real estate, and specifically within commercial property and investment property research and analytics. In our current business, it involves multi-let management, and we have a good team on the ground in London that manages this business, and it's growing quite well. Together we have over 13 years experience in property investment, and we've purchased our first one back in 2003. So we're very fortunate about the things that we've learned over the years, and part of what we love to do is to give back. So on a personal level, we both are very purpose driven, and we love to help out in our local community. We do this in a number of ways, mainly through our local church, where we run free debt management courses, as well as other courses that we run, as something that we enjoy and something that we love to do. So, what we're talking about in this presentation is how you can really boost your property investment income returns this year. Now, this opportunity could really help you as an investor or a potential investor to completely supercharge your profits so that you can really enjoy your investment. Now, what we're talking about when we talk about good investments, or what we talk about replacing your income, we're specifically talking about low barriers to entry and looking at high returns as well. So they're affordable and they also yield a very good return and are hassle free. Now, when we talk about yields and a good return, we're talking about letting properties work for you, and that's one of our core values. And what that means is that let property work for you now, let it work today. And it's good to buy property for investment in the future, for your pension. Most people do that, but what about today? And we really feel that investing in property is for the now and not just for the future. So when we talk about buy good income, we're talking about £800 plus in net cash flow, and that's our target really. Obviously we do have properties that where you can get less return, but ideally that's what the kind of aim we're looking at, or much higher than that even, and we're going to show you some examples of this. Also, when we talk about good yields, our definition here as a business is for yields not to be less than 8%. At an absolute minimum, we look at properties that yield returns of 8%. And in fact, we achieve and look to achieve much higher than that. And so these are the kind of examples that we're going to be sharing with you on this presentation, so you can get a feel for that, what's possible. So firstly, we will start with the 4 things that every property investor should know. Number 1, strong rental demand. Now, wherever you're buying property, make sure that the location that you buy has a good rental demand. I mean, there's no point in buying properties that are really cheap and no one wants to live there. You're going to struggle trying to fill it and run the risk of negative cash flow as well. Secondly, buy it below market value or look to add value to your asset. Now, this generally means buying from someone that's motivated, or pairing up with people like ourselves that can source these properties for you. So if you're an investor, you're buying for return, you need to buy low. So at the point of buying, you already have a deal and you're not gambling, waiting for property prices to potentially rise. Obviously they do, but we all know that they also fall as well. So please bear that in mind. Thirdly, buy for cash flow. As I said earlier, property is good for your pension, but it costs you money in the process of waiting for that pension, and it can be a big liability. So you need to be looking at high yielding strategies or good properties with a high cash flow. Also, you're less exposed when interest rates start to rise, because they surely will do, and you've left yourself a good buffer, and you're focused on strategies that will keep you comfortable where you have a good income. Very, very importantly. Finally, buy inexpensive assets. So you're looking at assets that are affordable, ideally below the minimum stamp duty mark of 125 would be a good place to start. That means that's for investment purposes. Why do I say this? Well, because if you have mastered the right location, then these properties will give you the best yield. And I've been mentioning yield for some time over this call. And what I mean by yield is calculated as the annual return on an investment prior to taxes and expenses divided by the current price of the investment. So basically, the lower the price of the property and the higher the rent, you can see that you get a better return. So we're going to go through a few examples shortly on what you can actually aim to achieve on properties like that. Now, after assessing these, the most likely question you'll be asking next is, okay, where can I find properties that meet the above criteria? And after extensive research for us as a business, we've narrowed our search to one particular city. Now, in the next few slides, I'm going to show you the type of double figure returns you can make and the reasons why, as a business, we have chosen to focus on sourcing properties for cash flow in this city, and how we could help you do the same as well. So, this year, we are launching our sourcing services outside of London in the city of Glasgow. Now, for us, after extensive research and much detail, we're going to show you 5 reasons why Glasgow is a good place to put your money in 2016. So please, again, do sit tight, because what follows are some real case studies that show you what type of returns you could be benefiting from now and in the future. So number 1 reason, price growth. Now, HomeTrack is the UK Property Price Index, and they found that Glasgow was the UK's 3rd fastest growing price location. It's already the most populous city in Scotland already, and so the fact that it's the 3rd city with the fastest growth is something to consider. Not only that, but it's a good indication when the supply of stocks fall, and what that means is that there's more demand, which in time will drive up prices. So it's really just basic supply and demand economics. So recently, the stock on the market has fallen by 12% this year alone, and it is really a main driver of price growth. So what that means is basically buyer demand is fast outpacing the supply. Second reason to invest in Glasgow, it's more affordable. And obviously there are more affordable places in the UK, but I'm going to tell you how this really is pertinent here. Now, London and the South at the moment is obviously becoming increasingly difficult for investors to enter the market if you're like a layman like myself. And what that means that yields potentially are really low. Now, I've explained what yields are. So if you're investing in London, you need to understand your strategy. Yes, you can make money from investing in London, but if you're buying for income, then please do consider what you're doing, because the yield you're going to get from London property is likely to be quite low. Now, the average yield for a 2-bed, for example, in London is approximately 4%. And for the UK, it's 5.3%. And that was released by the UK Property Watch. Now, you can see that these figures it's not really working the hardest for you, really. I mean, you know, it's okay, but as I said before, we focus on a minimum of 8% for yields that give you good return. Now, what's even more interesting, I felt, is that there's a report that's been released on the Telegraph.uk, and they highlighted the top 3 cities to invest in the UK. Now, this research report has released that those 3 cities, which don't include Glasgow, by the way, their average yield is 7.7%. So what they're saying is that the best yield you can actually achieve is 7.7%, and that's not even our minimum yield expectation. So you can see here that location, research, and expertise is very, very, very important. Now, also, the average property price in Glasgow is at 145,000, and that also includes the central part of Glasgow where prices are significantly higher, so you can definitely scoop up properties that are much less, slightly outside the city centre. Next, another good reason to look at Glasgow is because it has a very strong rental demand. Now, there's currently a very large shortage of supply of rental properties in the Glasgow market. Some of these have been caused by the shift from Glasgow being primarily a production-based industry to now really being a service-based industry. So what you're seeing happening is a lot of corporate organizations are moving their base, moving their companies into cheaper areas of the country, and quite a few of these are moving up into Glasgow. Not only that, but there's planned £1 billion project pledge of major infrastructure work that has been pledged into Glasgow, and that's going to lead to job creation within the next 20 years. So what we're going to see is there will be an influx of people coming into Glasgow for jobs. Also, a press release released from the Evening Times announced that average price rent in Scotland rose by 11.4% in the last 12 months. And they equally announced that rents are rising faster than anywhere else in the UK. And the average cost is more than £700 a month. So what you're seeing here already is that not only is Glasgow one of the top cities whereby there is the fastest price growth, but what you're seeing is also the fastest rental growth. Now, the rental growth is a good thing, but the price thing, if you don't get in sooner, then you're likely to get in when, if you leave it late, you're going to get in when the prices are already much higher and yields may not match up and be as high. So it's good to think about this for today. The next reason is the student market. Now, this also supports the previous reason with regards to strong rental demand, because in Glasgow, there are 1 in 7 people in Glasgow that are students, which is quite significant. I mean, it's an incredibly popular destination for international students, and there are 3 within the city, and it's the second city in the UK with the most number of universities. In addition to that, there's actually an undersupply of accommodation, which means there's another great opportunity in the student market. It's actually 10% guaranteed student housing. So what happens to the other 90%? I'll leave that for you to answer. The next reason, the last reason, and there are many, but we're just going to highlight the top 5, are the key amenities and attractions. Now, Glasgow is a very rich and a very vibrant city where you have the West Coast Mainland train and the airport. They've got Glasgow waterfront, and that's where the £1 billion investment is going to be heading towards. Now, I've been there a few times myself, and it's already nice already, but it's going to be completely transformed within the next few years. So, on top of all of that, the city already has international recognition, and it's a testament to the fact that in 2018, Glasgow will be jointly hosting the new European Championships along with Germany. And that's already after hosting the 2014 Commonwealth Games. So there's obviously, they did well there, and it's actually reflecting for what's going to happen in the next couple of years. Now, not only that, but the SNP, who are gaining even more political ground following the recent elections, are also very keen for Glasgow to be its own equivalent of London. And so what we expect in the future is more investment, as well as investment-friendly laws. So these are just some of the reasons we are excited about the potential here for you. And now we're going to look at some case studies to further cement this point. So here's case study number 1. Now, here we have a 2-bedroom flat on the market at £95,000, which is very close to Glasgow city centre, where all the main attractions are. Now, as you can see here, the monthly rent you can expect to get is £800 per month. That's a single buy-to-let, and just an easy single buy-to-let, you're looking at a yield of 10%. Now, that's really just effortless, and it's actually on the market, talk less of if you're buying it below market value. So it's something you can buy on Rightmove today. Now, what does this mean for actual return on your money? Well, if you look down below here, your ROI, return on your investment, your cash, is 40%. So now what we're going to do is compare that to London. Now in London, you have an equivalent 2-bedroom flat as well, of the same type size. You're looking to pay roughly around £230, you're lucky, £230,000. And obviously it depends where you are. You know, it could be more, it could be less, depending on where you are in London. But let's look at the concept. Now, your average monthly rent for a property like this will be about £1,300 per month, and that gives you a yield of 6.7%. Now, it's not terrible, but it's not fantastic either. So, but look at this. The deposit you're going to use to buy this house is going to be £57,500. Now, for that same amount of money, you can buy 2 properties in Glasgow, and your income would be about £1,600 per month. Now, that would be close to and equivalent to £20,000 a year in the compared to £15,000 as we can see in the London flat. So you're obviously yielding more with that, and not only that, you're gonna get a high rental income as well. Now, in case not study number 2, this particular house is a bit further out of the city centre, but you can pick up some houses for about 58,000 to 50,000 as well. So let's just use this as an example. Now, the deposit here is just £14,500, and just a simple buy to let is 10.3%, and you can buy 3 of these, and again, you're looking at close to £1,500 per month if you were to buy 3, with an average return on investment of 41.3%. That means that really within 2 and a bit years, all your money you've invested was going to come back into your pocket. A third example, this is the West End of Glasgow, which is very popular and quite a trendy part of the city. So here you can pick up a 1-bedroom flat for about £75,000. And to be honest, I was quite conservative with this rental value, but you can actually get properties that rent up to £900 per month for a 1-bedroom flat in this West End. It's a really popular area, and it's really picking up very, very quickly. So even with a conservative estimate of £700 per calendar month, and that's £8,400 in a year, you've already yielded 11.2%, and you've got a deposit of £18,750. So that already shows you that, look, there is potential there, and your ROI 44%, you can't really go wrong. Now, so those are the 2 points covered from that beginning of the presentation. Now, the last point I want to cover is the strategy that can absolutely supercharge your profits, and you could potentially replace your income, depending on what it is, obviously, within 90 days. And I'm going to show you how. Service accommodation. Now, you may or may not have heard about service accommodation, or you might know it to some degree, but it has the possibility of really supercharging your profits and boosting your income. Now, for those that may be not familiar with service accommodation or service apartments, here is what it is. It's similar to hotels, and you can rent out your flat or room, and inclusive of all bills and service charges at a daily rate. But one of the wonderful things about this is that it's very, very cost effective for those using it. So with the kitchen facilities and the extra bonus, if you're going to be staying with your family or your group, then obviously you're going to save lots of money on eating out, depending on how long you're away for. Another advantage of service accommodations is the fact that there are no tenancy agreements. Now, if you are a landlord like myself, then you probably already have had some type of tenant problem in some form. Now, with service accommodation, you never have to deal with tenants. What you have instead are guests. There's not an issue of tenant evictions or tenant rights. People just stay for a short while and then they leave. And another thing to really consider about service apartment is that if you own one of these and it's set up in the correct way, you are not a buy-to-let landlord. And what that means is that you are a business owner. And for tax purposes, your real expenses are exactly that, your real expenses. So the recent announcement of no more tax relief on mortgage interest here in the UK will not apply to you, which is a great advantage for some of our higher rate taxpayers. So that's something really, really to consider. So, who uses them? Service accommodations. A variety of people do. It's not just holiday makers. In fact, you've got professional contractors, you've got blue collar contractors, you've got builders, you've got family traveling for graduation events, you've got conferences. The list is really, really ongoing. People travel across the country for all different reasons. And even, don't take my word for it alone, but look at what's happening on the market. Now, companies such as Expedia, they're in the process of buying rental site Home and Away for $3.9 billion in the US. So they obviously recognize the growing trend to invest this money into this new alternative accommodation. And also, in a recent press release in 2015, Booking.com, one of the leading short stay accommodation websites, announced that they predict that service accommodation will soon take over the hotel market due to the convenience and the affordability of being able to cook your own meals. So they are predicting that's going to happen. But not only that, Airbnb, where you may be more familiar with, has launched a global product suite for businesses, and that was last year. And in its first year, they enjoyed a 700% growth since the launch over 250 companies like Airbnb's business travel, like Google, TBWA, Twilio, SoundCloud, to name but a few. So you see what's happening generally is that companies are using short stay accommodation rather than hotels because it's much more cheaper for them, for their business going forward. So as you can see, the facts really just speak for themselves. Now, before we go on, just to mention location, it's very important. And not only do you need to know what cities work, but you need to know what parts of the city work. It's not enough to say you're going to do it in this particular city, but you need to know what areas of the city are going to really work. We call it gold mine areas. It could be particular roads, it could be particular streets, it could be a certain hub in an area. So you don't want to have a service accommodation and then it goes terribly wrong. So now I'm going to show you a few examples quickly as I round up. So these are live examples. I'm going to see live figures, should I say. So the same property I showed you earlier, the 2-bed flat from £95,000. Now, with service accommodation, converting it to a service accommodation apartment, you could achieve a return of £2,000 per calendar month, and that is net of all expenses. So, and when I present this to you, obviously this is real figures that are actively in this particular area. Is actually real figures that are happening right now, and it's happening with an 85% occupancy rate, and that means that obviously there's lots of demand for certain properties, and that goes down to location, it goes down to area, and all other things that I'll tell you shortly. So not only is the occupancy rate and the yield good, but the return on investment is 99%. That means that all your money that you've invested into the property all comes back to you within the first year of purchasing that property. I mean, that's really just speak for itself. And I mean, obviously, I don't know what your income is, but the average income would be close to about £2,000 per month. So you can easily get one. And even if you've got two of these, I'm sure it would replace many people's incomes for whoever's listening to this presentation. Another example is this house here. It's on the outskirts, so the occupancy rate is not as high because obviously where it's located, but it's still 50%. And even at 50%, you can achieve up to £1,200 per calendar month net of all expenses again. And so that is very different compared to the £500 that you could be achieving on a buy to let. So your yields are higher, your returns are higher, and again you can benefit from a return on investment of 100%. It's very, very, very possible. Now, there are a few things you need to consider with service accommodation, and these are things like obviously location, I've mentioned quite a few times, occupancy rate, you need to know where you're positioned, obviously the interior, how it looks inside, you need to be really careful about how it looks, marketing as well, how do you market it, how do you achieve the best out of your property, it's your business, the price per night, how do you position yourself pricing wise, looking at your competitors in the same area, what they offer, what you offer. Also reviews are very important as well. That's extremely important. It's also first impressions really do count here. And finally, cleaners. You need to have a system of managing the property between people staying, between different groups staying in your accommodation. So I hope that's really given you like a good introduction of what's possible, and it really would like to just invite you to what's next. I mean, I said at the beginning of this presentation that we are showing you how you can boost your income in a cost-effective and a time-efficient way as well. And hopefully you've been able to see how you can do that with some of the things I've shown you on this call. Now, at Acquired Homes, we actually source, we manage, and we actually report. So you can, if you wanted to, do some of this that we've shown you on this call completely 100% hands-free if you wanted to. You get to benefit from some of the returns we talked about, some of them, and it's really a great opportunity to benefit from some of the good returns in this market. And more and more people are gaining awareness of this anyway, and so it's all, as more and more people are gaining awareness, now is definitely the best time to take action. And obviously the more you delay, the more you miss out. So, and also if you know somebody as you're listening to this that might be interested, then feel free to forward this on, or also get in touch with us anyway. We do pay a fee for referrals as well, so do contact us regardless of your position or wherever you are at. What we would like to do is just invite you to schedule a call with us. There's a big button on this screen that says schedule a call now. Have a chat with me or my husband, and we will talk through you how exactly this can work for you or what your interests are. There is absolutely no obligation whatsoever to do anything with us per se, but we just want to have a chat with you and see if this could be something that you would like to take forward. So again, I want to invite you to press the button on the screen right now that says schedule a call. Get in touch, let's have a chat and see how we can help you make your 2016 the best year ever with your property investing. Thank you so much for your time. Hope you've enjoyed it. Bye bye.